Okay, hello traders and welcome to our live trading session video today. It's still Napan here, founder of Master the Markets Illitrades Conference and the Traders Open Day. So today, specifically in our live trading session, we're going to be looking at the topic on trailing stop loss. Okay, now before we look into that, just a quick recap of what we have looked at so far. Okay, so let me just share my screen. So you can see this is the intraday chart over here, all the daily and the 3 multiple time frames what we've done over here. If I start off on the daily over here, you can see over here, traders, that so far in our live trading session videos, what have we learned so far? So let me just do a quick recap over here. So the first thing we have to do, like with any strategy, is to formulate our entry rules, isn't it? Yeah, entry rules. Now, the entry rules we have looked at so far on intraday can come from the stretch line, okay? Based on the opening range breakout strategy that was popularized by Toby Crable, who's a very big hedge fund billionaire manager, okay, billionaire hedge fund manager. He popularized the ORB strategy, which is based on the stretch of the bars, okay. Now over here, you can see on the 1 hour, what do I mean by the stretch bars? All we were looking at is one type of entry where when it takes out the upper stretch line, which is this green line here, once you got your indicators formulated for stretch, from the open, there's an equidistant stretch line, you see, from here and then to the red one. Whichever one that is hit first, then we will take the trade, saying that to that direction, the stretch is not going to form no longer today, and the BRO is going to form once it takes out this line. And then we looked a bit specifically and we said, if it takes out that line and it closes above, then we would take that trade. So you can see over here, they all reached it, bounced back down. This one did go through it, but then still closed below it as well. Okay, so we would have been taking a trade on that. This just closed on it. There was not much conviction on that particular trade, so on, so forth. Okay, so that's the first type of entry that we looked at, just based on stretch. Okay, if it takes on either of the stretch lines. Now, then we also then looked at using time frame correlation, how we can actually use the daily to form a bias. So we're saying that we will look on the daily, and if let's say we formulated a very, very simple rule saying that if it's a top to bottom move in this case, okay, top to bottom move in this case, it's going down, then all we would then look at on the 1 hour is only for the lower stretch line to be taken and for the BRO to be formed in that direction. So we wouldn't take anything off from here. So that's the second thing that we looked at in our live trading session videos, wasn't it? So the first one was stretch 10, which direction it takes it out. Second thing was the time frame correlation in how we can form a bias to which stretch line we're going to be taking so that we don't get fake breakouts like that and get caught out by just capturing the last part of the move like that. So that's the second part we looked at in time frame correlation. Then the second thing also we did look at is the initial stop loss as well. In our live trading sessions, we don't go into too much detail. We'll probably do a session on this as well. And then the last part that we then definitely did talk to you all about is setting targets as well. Okay, but one thing on the stop loss section we did take a look at was the risk management in terms of using different position size calculators on different brokers, and which would tell you exactly how much risk you're taking. The third thing then we then looked at was the target, as I just mentioned, wasn't it? We looked at how to set the target based on range levels for the day. Or if you want to let it run, then we looked at, swing high and swing low levels, or past resistance and support levels to set your target, and even on higher time frames on a weekly or a monthly. That's other things we looked at. Now, today's video, we're going to be looking at how you're going to trail the stop loss. How are you going to trail the stop loss? Okay. The first question that you need to have, when you're looking, before you are going to decide how you're going to trail your stop loss, you must first know what's your objective. Okay. What do I mean by that? Your objective as in the sense of, do you have a very high, far away target, a very large, let's just say large target? Or do you have a very small target, which is just very short distance away? Okay. A short or a big target, whichever way you want to call it. So for example, what do I mean? Let's say, for example, you just say short target in terms of, you're taking it from here on the long, and all you're just going to exit in about 20, 30 pips. Okay, is it a short target? Another one, a large target, is it going to be in 500 pips or 1000 pips? Okay, that's what you're going to be looking at. Of course, as you know, over here, Master Markets, we quantify everything. So some of you may be saying, oh, that's still a bit subjective, Thiru. How do I really quantify this? So what we can do, we can use the ATR numbers. As long as it's one ATR range, it's a small target. And if it's anything beyond that, I would say 3, especially 5 ATR and above, I would say they are bigger targets, okay, that we are looking at from your point of entry. Right, that's one way of quantifying that you can definitely do. Now, if your objective, once you've defined your objective, then you can then decide what type of trailing stop loss you're going to be using. So for example, if you're going to be using a large target, that means, let's say I entered here, this is my entry point, and my target is going to be here, right? Of course, you can see there's a big distance to travel, isn't it? If, of course, there's a big distance to travel, then of course, you've got to give it a bit of a room to travel as well, because it's never going to, travel just in a clean fashion towards your target. What it's going to be doing is it's going to go back a little bit, take some profit taking along the way. Then it might go up, to your target again. So then after that, then it might do an insider bar, then it might consolidate within, it might come back down, it might come back down a little bit more. And then after that, then it still doesn't confirm its stop, and it still keeps going up, and then it hits your target. So this is, scenario 2 is usually meant to more happen definitely, right? As we go along. So traders, if you know that your target is large, and along the way, you see all these ways that it moves is what we call the order route, okay? The order route. If the order route is not going to be clean, that means you got to give it a lot of room to move. So that's why I say if your target is large, you use what we call a conservative target. That means give it a lot of room. But if your target is small, then you use an aggressive stop loss. Okay, aggressive stop loss. So conservative trailing stop loss. I don't know if I said conservative target, but what I mean is conservative trailing stop loss or an aggressive trailing stop loss. Okay, so these are the two types, but you only decide on how to do that based on your target. And actually, even this we've quantified here at Master the Markets. There's only 3 types of market structures. And based on that, you can actually choose the different types of trailing stop loss that you can use to get to your relevant target. Remember also that depending why we're saying large target, give conservative trailing stop loss, because eventually it's a cumulative thing, isn't it, traders? Yeah. Cumulatively, you must be looking to get net positive. To get net positive, total profit must be more than total loss. Even though if some of them hit your target, but all the others, they give out back too much, and you're dragging down and eating up your profits, you will end up negative. So that's why you got to be very careful not to give back too much on the other trades that do not get to your target. So you have to find the balance between conservative and aggressive. Sometimes you can use a combination of them as well. Then the final thing what I want to say is, after you have decided on how much room you want to give, then you got to then decide what type of trailing stop loss you want to use. What type of trailing stop loss you want to use. So that can only be three types. One is a money stop. Two is a time stop. The last one is very popular, which is a technical stop. Okay. Of course, most of you will be asking, okay, which one is the best one, Thiru? Which one should we be using? There's no best answer, but all I can tell you is one. If you know to combine all of them, that will definitely be the best rather than choosing just one. So that's how you need to formulate your rules. And once you formulated your rules, stick to it. That's important because then we need a lot of numbers to carry on and the consistency to carry on as well. Okay, I was just listening to one other recording from a webinar actually from another very good hedge fund trader of Dun Capital. And the same thing that they say over there, especially you're talking about trend trading, whatever type of trading that you're doing, traders, no matter what, you have to be patient and you got to pull through the drawdowns and stick to your rules for the law of numbers to take its place and for its consistency to take in effect and for your cumulative net results to finally be realized. Okay, that if you were to say, if any word I would use, I would say that is one of the holy grails of trading. You have to stick to your rules, let the law of numbers carry on, and let the consistency be there, okay, for your final results to be realized. So then is what I would like to say about trading stop loss. Objective, large or small target. Two, are you going to use a conservative or aggressive trading stop loss based on your objective? Finally, the type of trading stop loss you're going to be using: money stop, time stop, or technical stop. We go through all of that much more in detail in our Traders Basecamp package and our Traders Toolbox, our advanced workshops, and all of that with our traders. Okay, the final thing what I want to do just before I conclude, just take a look quickly at the markets today. This was on a top to bottom, so we'll be looking at the lower stretch line to be taken out. It did take it out today, but it did close it, so there wouldn't have been any trade on that particular one over there. Dollar Swiss is basically a bottom to top over here. On the 1 hour, if you were to take a look at that, you can see that yes, this was a trade here, wasn't it? On the close over here actually, and that you could have right that move, but based on your trailing stop loss and your range, then you would have to decide how you're going to be trailing your stop loss. But do remember, intraday is usually very noisy. I've seen that, but you have to test and see which one will yield you the best results. Euro dollar, on the other hand, was again top to bottom, open equity diminishing to that. So probably you could even decide when you're doing the intraday trading not to take any particular trades on here. But as of here, yes, you would have got a trade if you didn't bother about all of that. How you trail your stop loss, how you got out is the next question. Dollar yen, on the other hand, you can see over here that it was a bottom to top move as well. On the 1 hour, when it takes out the green line here, that's when you would have got a trade over there. So even just simple rules like that can even get you to your profitability. All right, I guess that's pretty much that from me on this video. So quite a little bit for you to look at and to digest. We put some really amazing, good quality material out there. So do reflect on them, do watch on them. I did a recap as well. And then see how you can also incorporate it into your own trading strategies. And of course, if you need any help, we're always here to help you. We are here to serve you and to give you the best on every single part of your trading journey. That's all from me for now. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.